Hi there, welcome to Kneppy Invest, and welcome to a standalone answer and reply video to a really intriguing, interesting comment from a DS HW5CC. And I have seen these sort of questions or comments raised quite often. Okay, so check out super retail results, laughing face. I can't make heads or tails of this market result. Soft 4% NPAT. Market sends it up 15%, LOL, PE of 20, LOL. Now, I've seen this sort of questions raised or comments raised quite often over the last 15 years. In fact, I might have raised this sort of question or this comment when I was a new investor, novice investor. Now, I'm not saying that DS is a novice investor, but I do tend to think that the majority of these sort of comments or whatever questions would be raised from novice investors who don't really understand how the market works. Now, I can actually understand why super retail share price is up 15%, even when their results looked really weak. Now, this is really important. The market does not react to the results. The market reacts to two different things. And I'm going to show you those two things in this video. So even though a company's results might look good or bad on the surface, there's few other things that are more important. In fact, way more important. Okay, so what I'm going to do, by the way, share price of Super Retail Group is currently up 13% as I speak at around about 4 p.m. local time on Thursday, 21st of August. So the company did release results today, and I'm going to have a look at their media release. Now, what I'll first do is focus on the first reason, and then I'll look at the second reason why the share price is up. And I can completely understand why the share price is up. It makes complete sense to me. Maybe not up 13%, maybe up 8%, 7%, but the market likes what they see. So what is the market looking at? The market isn't looking that group sales are only up 4.5%, or that gross margins are down 50 basis points, or that NPAT, normalized NPAT, is down 4%. Now, on the surface, that looks pretty bad. That does look bad. That's like, ew. Ooh, but if that's all the information you had and you made a decision on that information alone, you're going down the wrong path. By the way, normalized earnings per share at $1.03, and that's going to be very important in a second. So that's their numbers. Something else you might be drawn to if you look in the results is they do break down the first half numbers to the second half numbers, and it does look like the second half numbers were a little bit better. So group total growth in revenue up 1.8%, in the second half up 3.4%. That's like for like, not overall sales. And the reason I do focus on like for like is that does not include new stores. New stores will, just by existing, will grow the revenue of a company. And that's why the revenue growth was a 4.5%. Like for like sales growth was only up 3.4% because the company did open new stores during the year. So I do prefer to look at like for like. But in the second half, the most important thing here is second half like for like sales growth was much better than the first half. So maybe things are starting to turn a little more positive for the company. And this becomes even more important later in this video, or will become a little bit more important later in the video. Now let's go back up to their numbers or the results. Okay, so the first thing that is really important here, it's not the numbers that are important. It's the how the numbers compare to estimates or consensus or expectations. So the market could have been thinking, look, I don't like how this company has been performing. I think the profit will be down 10%. I think the profit was going to be down 10%, and therefore I'm going to put that into my valuation models, and then the valuation model spits out a valuation of this company, and the share price of this company right now is based on that. And then the profit comes out, oh, it's only down 4%. Oh, I have to rush to my machine, put the new numbers in, and what spits out? The valuation of the company is now much higher, because instead of the profit down 10%, now it's only down 4%. So one of the most important reasons, one of the two reasons, most important reasons why the share price of a company might be significantly higher than what you might think it should be based off the results is because the results are better than expected. And these results are better than the market expected. And I'll show you why. I'll show you how I found this out. Thankfully, someone did reveal to me that Morgan's reporting calendar website is really good and doesn't have all the companies in it, but does have Super Retail Group. And in their calendar, they do have consensus forecasts for these companies. So we can actually compare consensus numbers for Super Retail Group to the numbers they achieved. And you'll find that the numbers were better than expected. Okay, for instance, revenue just over $4 billion, and it was 4.1 billion. So revenue was actually a little bit higher than expected. But most importantly, normalized earnings per share achieved over $1. In fact, they were 102.9 cents or $1.03. The expectations for Super Retail Group, earnings per share normalized 95.7. So just compare those two numbers. What would you prefer? $1.03 or 95.7? And you'll notice that the number achieved was much greater, almost 10% greater, not quite, 10% greater than the forecast. That is reason number one why the share price of Super Retail Group why the share price is higher today. It's because these results were actually better than expected. That's it. Well, that's not it, because there's another reason as well. Okay, so the second reason why the share price is higher, and this comes back to the most important thing when it comes to the market. The market's forward-looking. The market doesn't care about the past so much as what's happening in the future or what's been happening since the start of the financial year. And this is a reason why any sort of outlook a company gives or trading update a company gives is really important. And Super Retail Group did provide a trading update. And this trading update was actually quite good. So like-for-like sales growth, 3.1%, and total sales growth, 5%. So there is a chance that this was better than expected. In fact, if you have a look at earnings per share growth expected for financial year 26, the market is not expecting much growth for this company at all. In fact, fairly flat. So maybe the market is now thinking, hey, our numbers for financial year 26 are a little bit out. We should raise our expectations. And if we raise our expectations, what does that do to the share price? It raises the share price. So those are the two reasons why Super Retail Group share price is up 13%, even though the numbers look fairly weak. It significantly beat expectations, particularly with earnings per share. And I have a feeling that the company's financial performance so far in financial year 26 was a little bit better than expected. Okay, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.